So welcome to week 2 of the January intake. Basically, we are going to look at corporate and commercial practice. So this module deals with the establishment of various businesses and structures that enable clients effectively run their businesses. So basically, in this module, we shall be looking at different types of business structures and entities to include partnership, sole proprietorship, companies, as well as limited liability partnership and general liability partnerships. So this is a very wide range of businesses that can be set up in Uganda. Legal practitioners are oftentimes called upon to advise on formalities for the formation and management of these businesses. It is therefore imperative that lawyers are equipped with skills to enable facilitate the setup and running of these businesses. So we can see how can you set up these different types of businesses, and also how can they be run legally. So aims of the workshop, the aim of this module is to develop the ability to advise on business setup and management. So we shall look at how different business entities are set up, to include sole proprietorship, companies, partnerships. Then develop ability to set up businesses, develop the ability to structure the management of businesses, and recognize ESCO issues arising in the setup and management of businesses. So one of the ESCO issues we shall be looking at is, of course, registering your businesses and meeting the requirements of the law, as well as operating with a license. So learning outcomes, by the end of this module, you should be able to explain features of various business associations to include sole proprietorship. So we looked at sole proprietorship, and we see that a sole proprietorship is a business owned by one person. So a sole proprietorship does not need to be registered unless you are trading within a new name. Then we also look at partnerships, general and limited liability partnerships. So when we talk about general partnerships, this is where all the members in the partnership enjoys unlimited liability. Whereas when we talk about limited liability partnership, we have one of the member in the partnership who enjoys what we call limited liability, who can either be a minor or any other person. Then professional partnerships include those ones like accountants and also lawyers. Then company, private, I shall look at private companies as well as public companies. And remember, a private company, you can have members up to 100, whereas public companies, they are unlimited. In a private company, you cannot transfer shares freely, whereas in public companies, you can transfer shares freely. Also, public companies are allowed to trade shares on the public, whereas private companies are not. We shall also look at NGOs, or what we call non-government organizations, and how do you register ones, how do you register an NGO, as well as trusts, and how do you incorporate a trust, as well as a single member company. The ones where is registered by is owned by one director, and we have the nominee and alternative directors. So establish an appropriate business association for your clients, draft documents necessary for the establishment of business association, and recognize and resolve ESCO issues relating to business establishment and management of business entities. So the facts are Juma Mukoto has been engaged in the sale of plumbing materials. He started his business in 2009 when he dropped out of school due to lack of tuition. He rents premises in the 7th Street industrial area, Kampala. Over time, business costs went high, and he was forced to find ways of cutting costs. He got his friend James Nkuta to share rent space with him and contribute to expenses. Jameson was selling cement and undercoat. The signature outside their shop reads Building Needs Enterprises. They did not formalize anything, and the agreement was verbal. So basically, from what you can see, these people were operating under what we call an informal partnership, and also they have a business name which they have not since registered. So that's what I can look at here. Then Jameson and Juma have now decided to expand the business so that they deal in building materials, including construction, plumbing, and wiring materials, and paint. Together they will raise Uganda shillings 750 million for the business. Juma, a recent born-again Christian, wants to bring in his mother, Prophet Nambi Guru, to join in the business. She does not have money but is an accomplished accountant who was practicing as a chartered public accountant. So basically, remember that we have rules governing admission of new partners in a partnership. So those ones are always covered by the what? By the partnership deed. But here the partnership deed is silent, then you have to go and look at the Partnership Act. Remember, for you to admit a partner in a partnership, you must get consent from all the other partners. So but basically here, because he's coming with a skill, contribution in the partnership does not have to only be monetary. It can also be the skill you are bringing into the partnership. So she took on God's work. She will offer accountancy skills. She will offer accountancy skills to the business, and will also offer prayers and intercede for the businesses so that it thrives. She has an old pickup which can be used to ferry materials for the business. So now once you join a partnership and you bring in a car or maybe a motor bike, the challenge now becomes, is that treated as partnership property or it remains individual property? But the way you analyze that or maybe find out that is by looking at how you agreed. If you agreed it to be treated as partnership property, then it's going to be partnership property. But if you did not, then it can also be treated as individual property. So, however, she's aware of business risk and has asked that if possible she be protected from business risk failure, so that Juma and Johnson bear the risk alone. So that means the only way she can come in is through a limited liability partnership. If he wants to protect him risk, he will have to go for what we call limited liability partnership. Juma and Jameson come up with the name Holy Spirit Revival Enterprises. So now this name must be registered. Once the partnerships are trading together in a name which is not in their names, then it must be registered. Juma also thinks the business can deal in selling of military style safety shoes, which are almost similar with UPDF boots, save for their larger soles. Is sure that builders will like them because they are comfort and very light together. So basically here now you cannot deal with, you cannot sell anything which is similar to the ones for UPDF, because the UPDF Act does not allow you to do that. So Juma, Jameson and Guru tell you that they would like to formalize their business. They do not want a lot of formalities and would like to run a simple and efficient business which relies on and benefits from the personal expertise without creating unnecessary corporate structures. They believe this will make their business flourish and quicken decision making. So I think that Juma, Jameson and Guru tell you that they would like to formalize their business. They do not want a lot of formalities and like to run a simple and efficient businesses which relies on and benefit from their personal expertise without creating unnecessary corporate structures. They believe this will make their business flourish and weaken decision making. So basically here we are looking at, of course, at having a partnership. Of course, you have to look at the general partnership and also limited liability partnership. But since we have one member who wants to limit his risk, the most appropriate will be the limited liability partnership. Task 1, formalize your instructions. So you will formalize instructions by signing what we call an engagement letter. And an engagement letter is under regulations 2, sub-regulations 2 of the Advocates Professional Code regulations. And basically for a lawyer, if you have read the decision of Stephen versus Stanbic Bank, the court stated that for you to act for a client, you must have received instructions. So that's how you formalize your instructions. Then to extract any missing information to enable you execute your instructions. So you will have to now get information that can help you register a partnership. Where is your office going to be located? How much money will each partner contribute? In case of this, how do you want to manage that? Do you want to dissolve how will partners be admitted? You understand? Do you have national IDs? So those are the additional information that you will get from these people to help you register businesses. Then 3, advise your client on the nature of the business relationship between them, tracing it from the Juma started running the business. So basically they started as an informal partnership which was not registered, and now they wanted to make it formal. So initially it was informal, but now they want to formalize it. Then advise your clients on any potential breaches of the law committed thus far. The potential breaches of the law is they were operating under a trading name, but it was not registered. So if you're a partnership to operate, if you're trading in a name not in your own names, then you must register it. Secondly, you must also be having a trading license if you are in Kampala or any other area. So we don't have any information that they had trading license. Then thirdly, we don't see that they are tax compliant. We don't see anywhere that we are filing returns, and remember, as a business, you must do that. So what challenges are they may encounter in registering their business? So they may require a challenge one of the fact that they want to trade shoes which are similar to the ones for UPDF. They might not be allowed because under the UPDF Act, you are not supposed to sell anything which resembles that of the UPDF, like the way we saw in these people power gadgets, red barrets, when they were saying that those one were material of UPDF, so people power was not supposed to use them. So such things. Then other challenges, of course, they might likely face fine and penalties from URSB since they were not tax compliant. Then what are the likely legal and business challenges you envisage considering the business entity your clients opted for and the unique circumstances as highlighted in the facts? So the business challenges could be one, raising capital, of course, competition, then lack of skills to manage the business, then also leadership skills, and also marketing skills. Then assuming that the parties have agreed to set up a business, filling necessary statutory forms to register the most appropriate business for them. So basically, if you're going to do for a partnership, one, you must register a business name under the Business Name Registration Act, where you get what we call a business name certificate. Then also after that, you must also draft the partnership deed, and this partnership deed must be registered. But we have the case of Komakech David, whereby they had entered into a business for driving tax. It was Dr. Okero versus Komakech David. They were operating a taxi business, and then later the person said there was no partnership, that he had only advanced me money, but this was only a loan, so there was no partnership because the partnership deed was not registered. So the court stated that non-registration of a partnership deed does not render the partnership invalid. So we have to be alive to that decision. So basically here we have the Business Name Registration Act as well as the partnership deed. Draft the most appropriate agreement to bind their relationships. This is going to be the partnership deed. Advise the parties on necessary licenses to require on business. We shall look at the business name registration certificate as well as the trading license. Task 2, assuming that Juma and Jameson have decided that the business they are running does not give them any continuity in the event of death of any of them. They also don't like the idea of running business without any solid management structures. This is risky considering the fact that the business has grown and has capital of Uganda shillings 2 billion. They want to close the business. Guru is in agreement with them, although she intends to get out of this kind of business and concentrate on God's work. There are also some debts owed by the business amounting to Uganda shillings 110 billion. Some of the debt was incurred by Juma when he took out materials to complete his house, but he has not yet paid, despite the payment date being due. The parties have agreed that the business debt should be cleared by them individually without reducing the capital of the business, because they want the entire capital intact for the entity that are going to set up. Assume we are running the business under the name and side of God is Able Enterprises. the name has become so popular and they want to keep using it for the new entity. Advise one, the parties on their duties and obligations to each other in relation to their business debt. So when you look at the Partnership Act, of course, you are all liable for your debt, the business debt, debt, and the partnership. The liability cuts across all members. So you are all liable to the debts of the business up to the time when you do what? When you retire. But the liability is always shared equally. Of course, there is a provision in the Partnership Act which I think you will look at. Duties and obligation. You have the duty and obligation to clear debts of the business. Of course, it's according to your liability. For example, here we had the limited liability partnership, so you only clear up to the amount you are liable to. If we are dealing with, for example, a limited liability partner, then Juma, Jameson, and Guru on the most equitable method they should use to clear the debt individually. So Juma, Jameson, so if they want to clear the debt individually, so they can use now how many. First and foremost, first go to the partnership deed. How did you agree that the debts are going to? How did you agree that you're going to clear the debts? So if there was no any agreement in the partnership deed, and also there is no limited liability partner, that means going to divide equally to the amount. But here, because also here, remember, we have the facts saying that the money was withdrawn by one of the partners to construct his house. But then the facts also tell us that they have agreed to equally share the debt. Then James and Juma on their obligation to Guru, if any, in the circumstances. So assuming that Juma and Jameson have decided that the business they are running does not give them any continuity, they also do not like the idea of running business without any solid management structures. This is risky, considering the fact that the business has grown and has capital of 2 billion. They want to close the business. Guru is in agreement with them, although she intends to get out of this kind of business. So they're saying that advise James and Juma on the obligations to Guru. So first and foremost, Guru wants to quit the business. So once Guru quits the business, of course you must give notes to the remaining partners, and he's of course liable to share on the other amount of money, their profit they have, because he has also a share. So however much he shares on the losses, but also has share on the profits that are already existing in the business. Then Juma draft and register the necessary documentation to end the business. So you have to issue the notice of termination of the partnership, which is also registered with the URSB. That is notice of dissolution of the partnership. Of course, we shall have to look at the Partnership Act, and it provides the section to that. What are their rights and obligations when they end the business? Of course, once you end the business, then you have, of course, to share the remaining profits equally, but also the profits, and also the business has to come to an end. You can't continue to operate under that business by the fact that it has come to an end. So how can Juma and Jameson secure the capital of the business for use by the entity they wish to set up? So they can see how can Juma and Jameson secure the capital of the business for use by the entity they wish to set up. So if you are going to set up another business entity and you want to secure this money, that means you first and foremost you can retain the name and now register it as a company, because that will help you to in the marketing, because by the fact that the name is already known, then they can also use that money which they already have to form the capital, to form the nominal capital of of the company. So part B, assuming further that Guru has decided to carry out business alone, she wants to set up an entity alone, but wants an entity which protects her from potential business failure in her individual capacity. She wants to sell only religious materials like Bibles, hymn books, Christian literature, rosaries, and other Christian paraphernalias. She trusts her husband, Pastor Conrad Chitu, and her son, God Charitable, to set up and run the business or manage its transition in the event that she ascends to glory and goes to heaven. So basically here in Task B, we shall look at what we call a single member company. For you to register a single member company, one, you must be one director, but also you must appoint two other directors, one nominee director as well as alternative nominee director. And the purpose of those ones will be to, in case you die, they will be to transfer the company to what? To your relatives, or maybe to your estate. And that's what you are seeing the roles. Of course, the Companies Act, I think Section 187, provides for alternative and nominee directors. Extract any missing information. Of course, missing information will be what's your share capital, where is your office going to be located, how many shares do you want to have in your company, who is going to be the secretary in case you have one. So that's also the information that's going to help you register this company. Then part C, use facts in part A. Task 2, Juma and Jameson have held on the business enterprises they set up in equal proportions. They want an entity that will not expose them to liability other than their initial investments if it fails. They want an entity that will outlive them. Juma is a Zambian citizen who has lived in Uganda for a long time but has never acquired Ugandan citizenship. Extract any missing information to execute your instructions. So here, because here they want a company, I will be asking one, what's your company name, what's your share capital, where is going to be a registered office, do you have any beneficial owners, like that information that helps you to do what? To register a company. Advise Juma on the most appropriate entity setup. So basically here we are looking at company, and most importantly a private limited company. Draft the necessary documents for two above using information you have obtained to set up the entity that suits Jackson's interest. So basically here we are looking at incorporating a company, a private company. Remember, most of it is now done online, but you have to fill, there's an application you have to fill, and also the necessary forms. So those are the forms you have to fill. If you look into the Companies Act, it provides those forms which are supposed to be filled for you to incorporate a company. Assuming that the entity, so ensure that your fees get paid. So you are going to pay the professional fees, because we have also the remuneration of advocates and taxation costs, which provides how much you must charge in case you are dealing with a company of a specific share capital. So assuming that the entity above has been set up, draft the necessary documentation to call the necessary meetings and set up management structures. So basically here we shall look at the notice. Basically the notice is the one that you use to do what? To call a meeting and ensure that all the legal processes are followed and file the necessary forms. So basically here we shall look at the notice to call what we can call an annual general meeting, and then this notice we shall of course annual general meeting statutory forms include the nominee, the office, where the office is going to be located, also notices and agendas. All those documents are supposed to be filed in the annual general meeting, but here we are issuing a notice basically call an annual general meeting. It can also be an extraordinary general meeting, but for private companies, it's not mandatory that they must conduct what we call an extra, to conduct what we call it's not mandatory for the company to conduct that first meeting. Here we can call an annual general meeting, and then that will be it. Because you have annual general meeting as well as extraordinary general meeting, and the other meeting which is always conducted always within 3 months after the incorporation of the company. Then assume that the business you have lawfully set up has been running for a period of 55 days, complete and file necessary documents post setup. So basically here you can have allotment forms in case you have given any other shares. We can have notice of registered address, annual returns. Also, because those are some of the documents that must be filed after the company has been set up. We have the notice of registered office, nominee directors. Also have the directors form. Also have allotment of shares if you have given out some more shares. Then Part D, though the entity set up in Part B Task 3, Juma and Jameson want to help poor, vulnerable children from their village in Champata, Busunju, Wakiso district. They want an entity that has its own existence and can make its own decisions. They always pay a pre-agreed amount of money in the event that the entity Jameson and Juma and other well-wishers until such a time as is able to generate its own revenue sourcing for funding. Advise Juma and Jameson on the most appropriate entity to set up in the circumstances. So basically here we shall look at, there are always two options, one NGO and also the trust, but we shall go with incorporating a trust because this is a private company. So we shall go with incorporating the trust, and then necessary information, the materials, who are going to be the trustee, who is going to be the beneficiaries, what is the subject of the trust, information like that. Then we shall draft the necessary documents to set up the entity above. Draft the necessary documents. So here we shall also look at a trust deed. We shall draft a trust deed. Explain the processes required to obtain a license to carry out an operation of the entity in Part C above. So we shall also look under the Trustee Corporations Act. So as we can know, how do you basically go about incorporating a trust and also the necessary licenses. So basically that's it for this workshop 1. But in case you have you want a thorough or in-depth discussion that entails looking at the acts, also entails looking at the cases, and also deep and thorough notice and analysis, you can join us in our mentorship program. We run a mentorship program that is basically online and covers both campuses, both the 4 campuses, and our program is basically online. You get to meet your colleagues from different campuses, so you can get to hear different comments from different farm rooms as they come in. But members here pay a monthly fee. They pay a monthly fee to support our research. So in case you want to be the part of that team, the part of dedicated students, you can inbox me, you can WhatsApp me on the number on my profile here. There is a WhatsApp number. Then you can WhatsApp me. Then I will also help you be part of that mentorship program, where we have an in-depth discussion of the workshop, looking at the sections of the law as well as the cases, and also we give you notes and properly drafted documents. Personal reading, we shall draft admission of partners into the partnership. We'll have to look at the Partnership Act. We have said that it's according to how you agreed. We shall also look at the resignation of partnerships. You must do what we call notice. Draft pleadings for dissolution of partnership by way of court order. And the grounds, of course, the grounds could be insanity, failure to properly run the partnership. We look at the Partnership Act, all those ones are provided. Then read tables A, applies private companies and public companies, B, C, D, E. So you have to look at the Companies Act provides for these tables. Look up a minute book of any company online and note how resolutions are registered in the minute book. Then also assume you are a company secretary of a private company. What documents would you need to maintain to ensure good sound corporate governance. Of course, one, you must have agendas, you have minute books, company secretary notices, like that. What evidence will you keep to ensure that you have evidence that any meeting, of course, notices and the agenda and the resolutions. Then also have file in a return of allotment for the shares. So return of allotment is basically a form that is filled when you have allotted shares to the public. So basically that is it for workshop 1. Allow me to go to workshop 2. So workshop 2 is saying that the aims of these workshops are to develop ability to hold various company meetings, develop the identity and deal with shareholder rights, develop your capacity to convert a company from a private company to a public company, and address issues arising from shareholder disputes. So illustrate the process of holding company meetings, illustrate regulatory compliance processes, illustrate enforcement of shareholders' rights, demonstrate the process of converting a private company into a public company, recognize issues. So part A, assume that the entity set up in workshop 1 part C has been operational for a period of 1 year. You are the company secretary, have been tasked with the duty of calling for annual general meeting. The constitution of the company that you adopted in workshop number 1 part B task C shall be your guide. So draft the necessary notices to convene the meeting. So basically here you have to draft the notice calling the meeting. Remember, the notice must be issued 21 days. It must be 21 days before the meeting date, and also you must accompany it what we call an agenda. So here we shall be looking at because an annual general meeting, then draft the, assuming that due to emergency and poor planning on your part, the meeting is called with notice shorter than the necessary minimum. What steps would you take to rectify this? Document the process. So basically we are looking at rectifying over the meeting. If the meeting is issued shorter than 31 days, you can pass a resolution from the meeting, and they provide consent, and then they rectify it. And then the documentation would be a resolution rectifying that shorter notice, because when you look at the table A, they provide on rectifying shorter notice, and there must be a resolution from the shareholders to that effect. Then part B, assuming further that after the AGM in part E above, Juma and Jameson developed a serious misunderstanding, the accounts presented to the AGM were also far from satisfactory and allowed a dire state of affairs. These are 4 disputes between Juma and Jameson, which stemmed from Juma hiding income of the entity and not recording it. He also takes advantage of his being managing director and chairman of the company to run down the company. He's a sole director while Jameson is the company secretary. He has threatened to block any attempt at removing him as director. In fact, he said he will not call any company meetings even if Jameson treats acid. He goes for expensive trips abroad with his various girlfriends using company funds. Jameson has found out that the company is now indebted to revenue, 53 million, and also 12 billion for surprise made but not paid for. This never happened when the company was being run well. At the time, both Juma and Jameson were directors until Jameson stepped down due to ill health. Thankfully, he has now recovered and is able to discharge any duties, but Juma would not let him. Juma has also denied Jameson access to company premises and will not let him look at the books of accounts. The books of accounts of the company are also poorly kept. There is a lot of revenue and expenditure that is not reflected. Jameson has also realized that he has never got any documentation relating to the company or showing proof of ownership of the shares in the company, save for signing the memorandum of an articles of association. Advise Jameson on the rights in the circumstances. So basically, as shareholders, we have a lot of rights. One, right to access the company books of accounts, and also rights to receive the share certificate, and also access company premises. So basically, these rights are provided for by the Companies Act. So that's what we shall be looking at. Then remedies in the circumstances. Of course, we shall look at rights of an aggrieved shareholder, you can petition the registrar as well as petition the court. We have looked at that in the case of Masur Kakire versus Incafex, which basically discussed the rights of an aggrieved shareholders. And of course, under the decision in Frost versus Haboto, where they stated that, of course, the general rule is that an individual shareholder is not supposed to sue the company, but the exception is that in case you have been, your rights have been aggrieved as a single shareholder. And of course, that one should be read together with the decision in Incafex versus Masur Kakire versus Incafex, where he also sued that the company matters were being mismanaged, and also the court had to look into those matters. So basically that would be what we're going to do here. And the necessary document would be draft and explain the necessary documents to draft a petition to the registrar, and also we can also petition the court. Then part C, assume that further to the conflict between Juma and Jameson above, Juma was ordered by court to compensate Jameson for the shares which he has since done. Jameson has since left the company. Juma has since brought an extra shareholder in the company to stabilize it and ensure that it gets sound corporate management. His entity's shareholding in the company has also been diluted to just 20%. The new shareholders have decided that the company should restructure so as to attract enough financing. They want the company to be open to any member of the public with capital to invest in it. So basically here we're going to look at converting private company into a public company, and the Companies Act has a section to that which gives a procedure of how you can convert a private company into a public company, because we have said that the public company cannot sell shares to the public. So once you want to sell shares to the public, then you have to do what we call converting the company from private to public. So draft the necessary documents. Basically, of course, here we shall be looking at amendment of the articles and the memorandum of association to reflect the changes, but also there is a form you have to fill for converting a company from private into public, which is also provided for by the Companies Act. So advise the company the steps to take to transform, which is also provided for by the Companies Act. Advise the company the steps to take to transform as per the wishes of the new shareholders. Also necessary documentation authorizing the transformation task 3. Do not draft documents for raising capital from the public. So basically here we shall look at, of course, that registration form, and also you have to alter the memorandum and articles of association. Of course, we are not raising money from the public, because that one we're going to look at prospectus, which shall look into week 2 of corporate and commercial. So basically that is it for workshop 2. And then we are required to look at the decision of Masur Kakire versus Incafex, which we really talked about because Masur Kakire had sued Incafex, the managing director being John Galuga, for mismanagement of company affairs. And one of his allegations was he was not allowed to access company premises as well as access books of the accounts. Of course, they defined who is a shareholder, a member, as well as a subscriber of a company. Because it's important that you understand the difference between a member, a shareholder, as well as a subscriber of the company, because those can be asked in an oral question. So a member of the company those are the people who register before the company is incorporated. Then once the company has been incorporated, they become subscribers. Then after these subscribers, if they proceed to get shares, after allotment, they become shareholders. So a member, these are people who register during the registration process. Once the company is registered, they become what we call subscribers. Then if these subscribers proceed to buy shares or allocated shares, they become what we call shareholders. So workshop 3, you are requested to set up a class firm to take you through LDC. You must indicate what should be in a professional firm, what is the mission, vision, and values of the firm you have set up. Suppose some members have contributed to partnership property, the LDC decided to discontinue them from the bar course and they have to leave. What's their fate and how do you handle them? Suppose LDC admits new students, how are meant to join your firm, how do you admit them? So discuss the process. So basically, how we shall look at drafting a partnership deed, but in these circumstances, it will be in light of LDC, your firms you have, and how you're going to conduct affairs. And they want you to say what is your mission. So your mission could be like maybe passing the bar course, and then the vision, making sure that you include the excellence, the academic excellence at LDC, then values, timely handing in of work, respect to each other, then also basically mission, vision, and values of the firm you have set up, and also how we are going to admit new members. Maybe new members will be admitted upon showing admission letter from LDC, and they will have to contribute a certain money to our maybe firm fund. Then also we are looking at how are they going to be to leave in case they are dismissed. So we are going to say that once the student has been terminated from LDC, he or she will be refunded the amount of money he would have contributed, with a few maybe charges. So basically that is it. Tasks: discuss the possible establishment of said firm, admission of new members, and retirement of the partners, draft all necessary documents, and calculate all the fees payable. So basically how we shall draft a partnership deed like the one we drafted, but here we shall be in the context of the law firm at LDC. And also if you can proceed to register it if that's necessary, and then calculate the fees payable under we have the advocates costs and remuneration costs, I think, like that, then which gives you for all these fees. So basically I have come to the end of the discussion, but please, in case you want an in-depth discussion that looks at all the sections of the revised act, looks at other cases, and also we'll conduct discussions over the weekend on Saturday as well as on Sunday from 8 p.m. to 10 p.m. So in case you want to be part of this team, members only pay a subscription fee of 100,000 per month, but we're a team of 8 lawyers who help you to discuss. You can get any feedback. In case you have any questions, please inbox me, and then you will be part of that mastermind group, which has all students from all the 4 campuses. So please, we shall be happy to travel the 1 year journey at LDC with you, and we promise to simplify the bar course for you, because as you don't have time to make research, for us we have the time, and we have been there, we have passed the bar course, we have learned, so we are able to share with you our experiences, as also as you learn from other committed students from different farm rooms. So it has been a pleasure as well as a blessing. Please stay focused. You can pass the LDC as long as you make sure that you understand each week's work. I really wish you success.